Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1614A, and today's date is July 12th, 2018, and the title of the episode is Welcome to the Economic Illusion. Here is the real economy. Let's get into the economic collapse financial news. Now, we understand that the real estate market is completely falling apart. It's deteriorating right now. And we see this in the United States. We see it in Canada and Australia. And the Australian housing market, well, it's getting rattled. The mortgage industry is in turmoil. Banks are battered. And we see that the prices in Sydney and Melbourne, they're starting to fall. The bubble is popping right now. And the numbers that they're putting out might not be the real numbers, because we have Lindsay David of LF Economics in Sydney, who is looking into this. He's also exposed the misconduct in Australia's banking system in early 2016. And what he noticed is that the numbers that they're putting out, the official data from CoreLogic, saying that Sydney fell by 4.6% in June compared to a year ago, with houses prices down 6.2% and prices of condos down by 0.7%. Well, he's saying that it is much worse than those numbers, that the housing market has fallen a lot more, somewhere between 11 and 15% over the comparison period. And he went on to say, "We stand with the view the Sydney housing bubble appears to have been pricked, and we are confident that the house prices will continue to fall at a moderate to fast pace over the coming months. This should eventually have a knock-on effect to the banking system and its stability and the ability to maintain profits. Furthermore, we can expect the residential construction sector to feel the pressure as more developers come to the realization that there is now no real profit to be made in a falling market. In a feedback loop economy so reliant on rising land prices, the risk of eventual job losses filtering through the Sydney economy appears to be on the increase, which could easily spill into the broader Australian economy." And this is not the only place we are seeing this. What is happening here is interest rates are moving up. The LIBOR rate, as we know, is continually moving up. And all these illusionary areas where they push these bubbles up as high as they possibly can to make it seem like the world is doing a lot better. And they started this back in 2008 after the financial crisis. They had to do something. So they had to create stress tests. So people look at the banks and say, oh, look, they're doing stress tests. They're strong. So now we have confidence in the banking system. Oh, look, the housing prices, they're starting to move up again. We have confidence in the housing market. Oh, look, the GDP numbers, the unemployment numbers, they're looking a lot better. So they created all these different type of illusions. They manipulated the calculations. They pumped up these certain markets. They created stress tests, and they made it look like everything was great. In the meantime, they were lowering interest rates, lowering it. In some areas, we got into the negative territory. But during this period of time, we saw that income growth, it collapsed. And we saw austerity all throughout Europe and many other areas, because a lot of countries were in a lot of debt. We know that global debt has risen to a height where it cannot be sustained. We know the debt in the U.S. is continually rising. It's all happening at the same time. This is what you can expect from a central banking system where it's on its last stage of this fake fiat system. In the beginning stages, they have hardly any debt, and they can print as much as they possibly can and devalue the dollar. The end stage is where the debt gets to a point where they can't sustain it anymore. They have to continually print to keep the entire system operational. They can't allow this fiat money to come into the public hands, because if that happens, you see inflation. So they need to stuff it away in certain areas: stock market, housing market, health insurance, and they put a lot of this money into the banks. And during this period of time, in the beginning stages, we see that wages, they increase, housing increases, we see inflation, we see higher interest rates. At the end of the cycle, we see the opposite. That's what we're seeing right now. And we see that real average hourly earnings, well, they are declining. They're not improving. They are getting worse. In fact, for the last 2 months, real average hourly earnings growth has been unchanged on a year-over-year basis. So, at the end part of a central banking system, we actually see the opposite of what happened in the beginning of their system. And this is what we're seeing right now. And what they need to do is they need to hide or change their data. And we see the Fed doing this right now. Actually, we have Mnuchin out there saying that the yield curve is not indicating any type of recession. Now, what's crazy about this is we've heard this before. We've heard individuals back in 2008, like Ben Bernanke, say that we're not forecasting any type of recession. Mnuchin's out there saying the yield curve is not indicating any type of recession. Now, of course, we know it is. We know what's happening here. We know the Fed just changed the yield curve and they'll be able to control it. They'll be able to move it in the direction they want it to go. And people will look at this and say, okay, it's not reporting a recession. Until the recession hits. Just like in 2008 when everyone thought there was going to be no recession whatsoever. Reports were coming out prior to 2008 that real estate is still contained. It's fantastic. The stock market is at 14,000 points. GDP looks good. Unemployment is at its lowest point that we've seen in a very long time. Companies look strong. They look very profitable. The automobile industry looks incredible. No problems there. Credit's flowing. And then we moved into October of 2008, where credit froze up, where the automobile industries, they were in so much debt they couldn't survive, where we saw corporations who said they were so profitable they needed bailouts. AIG, Bank of America, Citibank, JP Morgan Chase, Goldman Sachs, and many others. Actually, a lot of small businesses, they just collapsed. The subprime securities where they told us they were all AAA, they were fantastic. Pensions should purchase these because they're secure. You don't have to worry about them. Well, those collapsed. The stock market at 14,400 points collapsed. Everything fell apart in a split second. And all during this period, they were telling us how great everything was. The numbers look fantastic. The best we've seen. And there were no problems. Everyone was still purchasing homes. Speculators were still out there, not even knowing that there were problems. And here we have the same thing happening here. And all they're doing is changing everything. They've learned from the last crisis. We need to hide certain data. We need to change certain data to convince them that there's nothing wrong. But we already know that the corporate media, we already know that the Fed is out there telling us something bad is headed our way. They just don't want us to know. They don't want us to prepare for it. They want to point the finger in a different direction. Actually, we have Fed Williams out there saying, listen, we need to embrace the fact that we don't know what the next bad outcome is. We need to think outside the box. We don't know when the next crisis is going to occur. It's funny how they're continually talking about a crisis, how things are not going to go well, because they're in control of the economy, right? The Fed controls the economy. They control the interest rates. They can control the stock market. They create the currency. They can pump up banks. And they have no clue? Of course they do. They're just keeping everyone in the dark. They don't want people to know what they're up to. This is why they're changing the data. Anything that is reporting a recession headed our way, that's what they're changing. Actually, David Stockman came out and he said to Trump, not in person, but he was just speaking, and he said, the trade deals is not the problem. The problem is the Fed. We need to blame the Fed. And I completely agree. The Fed has always been the problem. The IMF has been the problem. The biz has been the problem. The Rothschild private Western central bank system has been the problem for the economy. I mean, think about it. Why do we have a private central bank controlling the economy for the people? I mean, what's the benefit? They can make it so there's no recessions. Well, we've seen recessions all along. They can keep the value of the dollar at 100%. No, it's devalued by, 96, 97%. What, we don't see inflation? Of course we do. Go back to 1913, compare it to today. We can't see their books. They're hidden. They're not transparent. They're private. It's not even part of the government. It's not even part of the people. So what's the point of it? That they do such a fantastic job controlling the economy? No, they really haven't. They've done an awful job. They made themselves very, very wealthy. They put countries into debt. They do that very, very well. And what we're seeing right now is the end stages of their system. And it is breaking down at an incredible rate. And they're preparing to shut it down, restart it, and they need someone to blame. They can't shut the system down without some type of an event, some type of individual or country or something they can blame this on. Because, of course, then everyone will point the finger at them. So here we are. We're headed towards a transition. The central bank hiding all their data, changing their data to pretend like they had nothing to do with this, that they weren't the cause. And of course, until we get something passed, until the people are screaming and yelling to audit the Fed, nothing will change. Nothing will change because those in government right now, they're not ready to change. They get a lot of free money. They become very, very wealthy in government. Why would they want to change that? And once again, if, say, Rand Paul puts out a bill to audit the Fed and they can't get it through the Senate, can't get it through Congress, it will never make it to the president's desk. So that's the first stage, and the people will have to scream and yell that we need to audit the Fed. Once this system comes down, the narrative is up for grabs. Whoever can control it, well, they will control the next system. But one thing is for sure, to get to that next system, we're going to be going through a transition from this old system that cannot move anywhere, it cannot move forward, to a new system where they're going to start everything over again. And it all depends on who controls the narrative, on what this system will be. But you need to be prepared because there's going to be a period of time where we're in this limbo state of being between the old and the new system. And it's going to be difficult for many, many people. And it's going to be hard for them to understand what has happened here. Think back to 2008, when all of a sudden people were losing their jobs, they were walking out of their office. The market came down, people lost their pensions. Multiply that by 100 this time. How are people going to feel? Because they won't be able to fix this problem like they did the last time. The system is going to continually deteriorate because it's built on a gigantic illusion. Nothing was ever fixed. All they did was manipulate numbers, change things, pump things up here, but nothing was fixed. We're really back in 2008. And all we did was add a lot more debt, make a lot more problems. We have a lot more derivatives, and the whole thing's a lot worse. So get prepared, get ready, because we're going to be going through this period of time where it's going to be very rough for many people. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.